So today, just for the sake of the recording, I'm going to repeat the topic of the day. We're going to break down a signal that was taken on, I believe it was the 6th of January, where we bought GU. And here we can see on our screen the open price. The stop loss was 14 pips, and we're going to break down the trade. Right now, it's running 7%. Okay. All right. So today, do you guys remember what we talked about last class in terms of cycles and what to look for in a setup? Does anybody remember? Does anybody remember that?
Yes, sir. We discussed about normal market structure, where we are discussing about the stop hunt, and after that the break of structure, and then return to origin. And we perfectly got that order block, and then we will hit our target.
Right. So we did speak about we did speak about that. Do you guys remember that last week we also spoke about what makes a setup a good setup, or what allows us, like, the elements to a trade setup? Does anybody remember that? I know this was last week, but this is still a very important class that was given. Do you guys remember that? What we should look for in a trade should be continuations to what's already going on, right? So firstly, we know that there are 4 stages to the market, right? There should be consolidation. You guys remember them? Consolidation, I already gave you one. What's another?
Expansion, reversal, retracement.
Expansion. Good. Perfect. Reversal.
Retracement and reversal.
Retracement. Good. So since we see all of these, right, we understand that all of these are the stages of the market, right? You should have known that from our academy or from last class, right? Now, once we see these, if we are looking, so if first we identify the stage of the market. So right now, what stage of the market are we in? Right here, what stage of the market are we in?
We are expanding.
We're expanding, right? So the overall arching, right? The overall arching sentiment of this pair is expansion, right? We're expanding. Now we kind of have to put our secondary or our local, or basically our local weather, you could say, right? So what's our local position right here? So let's actually replay this. Let's replay it to the candle that actually wicked us in. So right here.
So we didn't enter here.
Huh?
We have the signal from the last order block.
Hold on. I'm gonna explain something. Hold on. So right here, what is this? What is the overall market structure right here?
Higher low.
It's a retracement, right?
Mm-hmm.
Why is this a retracement?
New low.
Well, it's a retracement because it's going against the expansion, right? Anything that goes against the expansion is a retracement, right? Anything that goes beneath it is an expansion. Now that we understand that this is a retracement, what is our bias? Now that we understand that this is a retracement, what's our bias?
It will lead to reversal.
Right, very likely it's going to lead into a reversal. So since this is a retracement, it's very likely going to lead into a reversal. Since it's going to lead into our reversal, now what can we expect in the future? We're going to be looking for what?
We were looking for downtrend. You can say
Buying opportunity, sir.
Right, very likely we're going to look for our we're going to look for buys, right? Very likely we're going to be looking for buys. So because of that, we can put a higher time frame, or a at least a higher take profit, which in this case would have been very likely right here. Right here would have been our take profit. Now, since we can see that here, right? Since we can see that, we know that this is going to be our target because this is what in this case. Can anybody tell me what this is from a technical standpoint? What is this? It's a type of liquidity. I'll give you that much.
External liquidity.
External
Local high.
liquidity, right? Exactly. External liquidity, right? Since this is external liquidity, that's also going to be a target, right? So whether that be our first target, whether that be our last target, it doesn't matter, right? It's just that's the target where we wanted to go toward. Now, we see this, we had a better entry. We could have gotten an entry right here, but unfortunately it was at 3 a.m. and I couldn't get it for you guys. So we had to get it later on. Now, why is this a good entry? Can anybody explain to me why this would have been our optimal or our ideal entry?
Because
Right here.
it has the breakup structure.
What do you mean? Where from?
Because it's reacted off the previous order block.
Right, exactly. So right here we see that we had an order block. You guys see it right here? So then later on, we could very easily put it like this. Okay, this is our order block. So our ideal entry would have been from this order block. This would have been our ideal entry. Actually, let me put the crosshair back on because it's really not helping with the lag. I don't know why it's lagging, but apparently it's lagging for me on my screen at least. So this here would have been even better, right? This here would have been even better. Would have given us a lot more pips, right? But unfortunately, it was way too early for me, so I couldn't catch this entry with you guys. However, this entry, actually, we didn't refine it. There we go. There we go. All right, so as you guys can see here, there was an order block that was taken into that was already mitigated, right? And that order block was mitigated, but we don't need to ponder on an entry that we didn't take. Okay, all that we know is that if an order block is taken, right, and there is a significant reaction afterward, right, and then it starts retracing, what can we expect?
It will come back to the mitigation block.
Right, it'll very likely come back and it'll do some sort of retracement, and we can probably find an entry to go long again. Right now, the reason why I decided that this was valid was because this was the entry towards to an order block, right? So this order block right here was activated with this wick. Okay, so now when price and structure comes on higher, right now, at this point, we can assume that this order block is valid and that any retracements will lead into further expansion higher, right? We know that our bias, right? Don't forget our bias. We're in expansion, so our bias is going to be bullish. So any retracements any bearish action, we're going to consider retracements, right? We're not going to consider it as a reversal. So since this order block is valid, as shown by this significant reaction, we can expect further buys from within its structure. Now, can anybody tell me what you would look for within these positions? Can anybody tell me what they would look for? What would you guys look for?
So the reference point, as we discussed in the last class.
Right. So some people would look for imbalances. Some people would look for certain reference points. Can anybody tell me what other tools they would take into consideration? I'll give you guys one. You guys could have used your fib.
79% optimal trade entry.
Right. So sometimes remember that my area goes from the 705 I don't know why I can't grab my one that doesn't have every single one under the sun. Here we go. Okay, so you guys remember, actually, hold on, let me take this one off. Do you guys remember that my area is from the 705 to the 79? Right here is my golden zone. So right here, to be completely honest with you guys, this is kind of one of the reasons that I put it in this way, is really because I didn't want to have the full stop loss, meaning I didn't want to go all the way back to the one. I kind of was a little cheap on it, on the stop loss, because I felt like if it doesn't reverse from this position, it's very likely not going to. But that's exactly why I put it up at the 705, right? And that's from the 15-minute time frame, because that's the time frame that I prefer to use my fib on. Now, another reason that you could have taken this trade is because I have noticed over the years, right, that a lot of times when price shows efficient price action like this, you guys see how efficiently price action comes up and meets right here. So whenever price does this, this is kind of like a very, very nice place of structure where price will give you somewhat of an entry. So what I like to do is I like to look out for efficient price action within the range, and then from there, take that trade from that efficient price action. So the reason why I was actually even adamant about taking it from this 705 level was also because I saw that price action was efficient around this area. So because of that, I kind of treated it like an inefficiency. But at the same time, I looked at it from a fib standpoint, and I said, okay, well, any retracement that comes in our way is very likely going to be a retracement for expansionary movement. And that's why I took the trade, right? Now, I'm not saying that fibs should be used for everything. I'm just saying that I prefer to use fibs when it comes to retracements, because it's just a quick, no hassle way to look at it. Now, remember, if there was an order block lower, then what would we have taken? The order block or the fib? It is a bit of a trick question.
Order block, I suppose.
Right. Well, you can take anything, right? As long as you're in the trade, take it, right?
James, I just have a question, a side question. That first order block that you have there, here exactly. See that doji candle? I think it's a doji in the middle there, the long wick with a bit of that one there. Had that wick come down to that order block, would that have been mitigated? Yeah.
So very, very often that does happen. So it for me, in my opinion, it's not completely mitigated. There's still a chance that price will come back and react off of it again. But
because I see that often on the 4 or the 1 hour, and I'm like, is it mitigated or not? But I guess it's just happening, I suppose, isn't it?
Yeah, so a lot of times that does happen. So when it comes down again, that means that a lot of times, right, if there's an impulsive move afterward, price could have just been reaching within its internal range and to push up higher, or to push down lower, right? So I would take it with a grain of salt. That is something that will be important, because later on, right, let's say price is stalling around that area and it's just not doing anything, or it's not showing clean price action for a continuation off the order block, take that into consideration and possibly cut your losses. Right?
Okay,
So
thank you.
That is something that can become important. Just don't give up on it either, right? Don't just oh, I see a wick touching the order block, so I'll discard it completely. Don't discard it. Treat it like normal, but take it with a grain of salt, maybe 75% risk instead of 1. Just so you know, those have never really given me trouble, because I kind of don't treat them differently. Unless it's like later, like if it's immediate, I don't treat it differently. If it's like over here, then yeah, that's definitely mitigated.
Okay, fair comment. Thank you.
Yeah, no problem. So now back to what we were talking about. So we see the order block, right? That gives us a reason to actually take this trade, right? We see that the order block is valid. So we see a continuation to our expansion. right? Which was our original bias. So our original bias is bullish, right? We have an external liquidity. Now we can very, very easily explain how price comes down, right? We take it from our golden zone, right? Or 705.79. And then from there, we have a smaller stop loss. And I put that smaller stop loss simply because if it reaches down here, I really wouldn't want to be in the trade. That would just be a little bit too risky for me. You could have even refined it a little bit more, but I wanted to give the fib a little bit of space. As you guys can see, if we come back here, we have our 88.6 that's covered within our stop loss. So I just kind of wanted to cover the 88.6 and make sure that that every level that we had is covered within these levels, right? Now from there, very easily what we can see is that after this, right, price stalls for a little bit and price ends up going up and almost touching our target, right? So from there we see some strong retests, right? We see some strong retracements, and that's where we are now. Okay, so what did we learn from this trade? Can anybody tell me what we learned from this trade? Can anyone tell me? Can you guys you guys can unmute, you guys can do whatever you want, just one at a time. Tell me, what did you guys learn from this trade?
So firstly, we have to go with the trend, and it is not necessarily necessary that we should be entering on the order block. We can look after the order block get mitigated for the trade to get in that direction in which we have the directional bias. I think that's the point.
Okay, those are awesome. That's an awesome observation. How about anybody else? Anybody else want to go?
And more, price has created the new range, and we should be buying in the discounted region as we have the directional bias bullish.
Okay. I want some more people to give me their 2 cents on what they learned off of this trade. I want your observation. It doesn't matter how small or big it is. How did it help you? Are there any questions? I'll take questions right now too.
When the market takes the liquidity, those who are selling, then it's continue on to the expansion mode.
Okay, right. So liquidity targeting. Very good, very good. So, you know, having a target of external liquidity is very good. It's something that's very, very important.
Actually, there is a point you mentioned about that, like when we enter into a trade, you mentioned about there is a efficiency. So from that point we have entered. So can you please explain that it once again?
Can you repeat your question? Sorry.
Like previously when you are like explaining something, you just mentioned about there was an efficiency, right, in between the candles.
Mm-hmm.
So could you please repeat it once again? Like I couldn't get it. I heard about like how we can be enter just by following the, I can say, FVG or inefficient candles, but how we can enter with the efficiency with the efficient candles? Like I didn't get that.
Okay, so that example was very, it was honestly, it was honestly an example that would help you guys visualize how I kind of saw my entry. And the reason why is because here, right? So have you watched any of our classes on inefficiencies? Or have you
Yeah.
you watched any of our classes before?
Yes.
Yeah. So whenever so you understand the basic concept of an inefficiency, correct?
Yeah.
Okay. So you understand that here it's not inefficient, right?
Yes, definitely.
Right. It's not inefficient. What I'm looking more so, like I said last time, is to look kind of like like the template. Okay. So here, if this wick wasn't here, right, or if both of these wicks weren't here, what would we be left with? We would be left with an inefficiency, right? What I look more forward for is volume, right? So if we look at volume here, like the strength of the candle, and you can see, how efficient the movement was. Where is the most efficient point? Like, where's the mean area or the average area where it's most efficient? This candle right here, right? So this candle here is going to be our most efficient area. So this is kind of a concept that I've been thinking about for a while. I've never really voiced it, but kind of knowing where your volume is in terms of your orders and how strong price is moving in a certain way, is very important here, because if you see where price returned from, it returned from the average area or the average area where there's a lot of orders or a lot of volume going through it. So that's kind of how I explained it to myself. And it's something that helped me visualize more or less what, where price is going to have an average area of volume that I like to see. And this thing right here kind of helps. I'm still learning how to use it, but
Is that volume profiles?
yeah, volume profiles. Volume profiles I've never really dealt with in the past, but I've been looking at where to find your volume, your volume. So instead of using the volume profile, I've kind of done it by eye, but I was introduced to the volume. I didn't even know this thing existed a little bit ago, and I've been trying to see whether there's something there or not. So mostly, for the most part, it's just looking and seeing where there's very efficient movement, and kind of like the cleanest, most textbook efficient movement was right here between these three candles. So I'm going to take the middle candle, which was the strongest one. Then I'm going to take about the average. So it's about here, right? Like normal, like how price is supposed to work. So I put it, so that's another type of confluence that influenced me to take this trade. Now, as you guys remember, my final confluence where I put my entry point at was my 708, 79% level on my fib, because this is a retracement. I don't want to make a huge hassle out of it. I just want to get into the trade and be done with it. So from there, I just took it from the fib, and from there it just went all the way right up to our entry. So there was zero hassle, or our take profit, sorry. And right now it's running what? Since we didn't put a take profit on it, it's running at around 8% or 7.75%, 74%. Sorry. So as you guys can see, this area right here, like the middle area where there was a lot of volume, that's kind of where I put it in. Does that make sense?
Yeah, got it.
Are you sure?
Yeah, I got it. So, like, can I frame it in a way that the way we use inefficiency, can we also try this out, like while practicing it?
Oh yeah. But remember, this isn't an inefficiency, right? This is the reason why I said inefficiency is because that's kind of how I visualize it. Imagine if these two wicks weren't here, then this would become an inefficiency, and then that would become another confluence, right?
Yeah.
So the reason why an inefficiency works is because there's a lot of orders that weren't priced in correctly, right? But there's a lot of orders that weren't priced in correctly, or they were priced in too quickly by the algorithm, right? Which means that there's an inefficient price action right here. The algorithm hates that, so it's going to return, fill it at least halfway, and then continue upon its way. So that being said, the fact that inefficient, so if we go off of the theory of inefficiencies, meaning that there's a lot of orders that were priced in incorrectly, what if those prices were priced in correctly? That still means that there's a lot of orders. So if there's a lot, if there's a lot of orders, price takes a high and then retraces, very likely it's going to go back to the place where there were a lot of orders, right? to either price in more orders or do whatever it wants to do, right? That's kind of essentially what's going to happen. Does that make sense?
Yes, yes, definitely. Thank you.
Yeah.
Can you tell the difference between imbalance and liquidity void?
Oh, okay. So imbalance versus liquidity void. This is a question that has been asked quite a bit. So I'll answer it in just a moment. Now, first, before I answer that, so let me write that down. I'm going to answer that very, very quickly before I answer that. Does anybody have any questions on this trade breakdown?
Sir, how you deal with this middle piece of consolidation while entering that after entering the trade? Is that not bothering you? Because it bother me a lot of the time. This little piece of consolidation within the
You
range.
mean like this?
Yes, yes. I feel like it will be reverse on my stop loss.
Yeah,
So
so
how
a
to
lot
deal
of times, remember where your initial target is. Your initial target is right here, your external liquidity, which it did take. So because of that, if you wanted to get out right here, you would be completely fine. You'd be correct, right? For you to take that point right here. There's absolutely no problem for you to. But remember, what's our original bias?
bullish?
Right, we have an expansion, right? So unless price breaks structure, which would be below our entry, and our stop loss is going to be above our entry by this point, right?
Mm.
What do you think is going to happen if this structure holds?
It will continue its direction if there was no break of structure.
Right. So my mentor used to tell me this all the time because I used to think the same way. And sometimes honestly, I still do because when you become a signal provider, that means that everything that you do has to be spot on, right? From the trade management to the execution to the level placing, right? Everything has to be perfectly correct. There's no mess ups, there's no retries with people's money, right? So that's a lot of pressure. So sometimes if price starts doing this, I tell you guys to close. So sometimes even I still do it, right? But the biggest thing that I want you guys to realize is he used to tell me this, okay? He used to say, if structure holds, you hold. Okay. So if structure is holding, right, and price has not broken structure, meaning price has not gone back to our entry, because to break structure, it has to go beneath our entry, right? Then I'm holding it. So what you could have done is you could have taken 50% of your lot sizes as your take profit one, right? So this right here, your external liquidity could have been your TP1. So once it reached it, right, you could have closed 50% of your lots. So let's say you opened a 1.0, you could have closed 50 lots or 0.5, right, lots right there, right? And then you could have let the rest go. So if this hits your break even, it doesn't matter. You already took half of your profit right there, right? Now, if it continues on higher and it hits all the way up here like it is right now, you can let it run, okay? So basically what I'm trying to say is, if you feel nervous about something, set up different take profits and close partials. Okay, so close your partial positions. Does everybody know how to somewhat close partials on MetaTrader 4?
Yes, sir.
Okay. All right. So this is going to be kind of a lot of people say like, oh well, you got to hold all the way to your take profit, blah 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 blah. No. What you really, and next class, how about we talk about how to grow small accounts? Would you guys like to do that?
Yes, sir.
All right. So I'll give
Yes.
you guys a little bit of a preview for next class. The biggest thing that you need to do or learn when you're growing a small account, and actually I may do a joint class with Garrison on this because me and Garrison are very good at growing small accounts. When it comes to growing small accounts, you have to take profit. Okay. You cannot just leave everything on the table, right? You can't just leave, what's it called? You can't just leave profit on the table and expect to run it like a swing account. Okay, you can't do that, because if you do that, right, if you leave profit on the table, very likely what's going to happen is you're either like this is going to come into your stop loss at your entry, or you're just not going to grow your account because you're waiting for a ton of time for another dollar of profit when you could have moved on. Okay, so if this was a small account, I would have taken all of my profits right here at my TP1. What's the reason to hold it? I made 5.8%, right? 5.8 at an $100 account is $5, right? Which is a lot. So that's great, right? I have a nice buffer for my account to keep growing, right? And another win, that's another $5, another win, that's another $5, another win, that's another $5. Before you know it, you're gonna reach 200, 300, right? And then from there, you're just gonna keep growing. So basically, take profit. That's the lesson. Take profit. Okay, very very simply can be summarized. Take profit. So if you guys are like, if all of this is bothering you, don't hold it. It's okay. It's okay to take profit. You're not gonna go broke from taking profit, but you are gonna go broke by not allowing the trade to play out. So if you just if you take profit right here, okay, great, but then you're only hitting a 1-to-1, which is fine, but it's just kind of, you could have either just closed here or just held. Okay, so if it's already doing this, and your stop loss is right here, and you realize that it has to break structure for this for price to be invalidated, just hold it. There's like, just put your phone down, hold it, put your stop loss above your entry, right, and just hold it. What's the point on just obsessing over it? There's no point.
Got it, sir.
You know what I mean? Does that make sense?
Yes, sir. Yes, sir. Yes, sir. Completely.
Now, don't
So
feel bad.
can you just go on gold and check on H4? I can find out an order block
Okay.
around 1824.
All right, we will check. We will check. H4. Now, this is going to be about the last 5 minutes of class, guys, because I do have to go. I
Can you check?
have to. Yeah, go ahead.
Can you check on this area, like last candle, which was opposite to the direction when it got retraced from?
What's the level that you were looking at?
Just check around 1824. Last time when it was going down, all the clean red candles.
Right here.
Yeah.
So you think this is an order block?
I think it can act as an order block, but
That's a
altogether, if you see
liquidity
a
void
bigger
that's being
picture,
rebalanced.
Okay, so I believe whoever just spoke, I didn't catch the name, but I believe whoever just spoke, it has it basically correct. Yeah. Now,
Mark Shannon,
Mark Shannon, nice to meet you, man. So
pleasure.
Mahesh, what I want you to do is I want you to walk me through what you think. So tell me why you think this is an order block. Now, don't feel discouraged. I just want to understand how you're thinking, so I can show you exactly like what things you have correct and what things I
like
want
last
to change
time,
up.
it went clearly towards the downward side, and then it retraced back. Now it could be a trigger entry for us. Then again, it will go down.
Mm-hmm. Okay. All right. So you have the concept correct, right? Because you're saying, okay, it breaks structure. It comes down below, it takes liquidity. Now it's going to come back up and it's going to take this out. Okay. That's essentially what you're thinking, right?
Yeah.
Yeah. So you have the concept correct. Okay. You have the concept in your mind is absolutely correct. But I want you to think about it this way. Let's ignore this previous candle. Just ignore it. Okay. Now, if we're looking at this price right here, or this price action right here, what's the first thing that we're going to do if we're just
There should
analyzing
not
it?
be liquidity behind the order block.
Exactly. Very, very simply, there should not be liquidity behind a potential order block. And what is this? This is a very clear pool of liquidity, right? So this is a liquidity pool. Now, there was another question that was saying, what's the difference between a liquidity void and an inefficiency? A liquidity void is kind of like this, except it looks more like this, right? Meanwhile, an inefficiency is just one candle. Okay, an inefficiency is usually one candle. An imbalance, inefficiency, basically the same thing. A liquidity void is a series of candles that leads into a drastic drop or increase, right? Which doesn't have much action of the opposite kind. Meaning, if it's selling, it doesn't have much buying activity, and if it's buying, it doesn't have much selling activity. So that's kind of the difference right here. Visually, this is the difference. Now, going back to the original question, the reason why this isn't an order block is because, first of all, there's liquidity behind the order block. And this right here is a series of candles which doesn't have much buying power, except for this one, which fills in a previous inefficiency. So that means that this is an inefficiency. If this is a series of inefficiencies, usually I like to classify it as kind of a liquidity void or a pseudo liquidity void. So because of that, I would like price to fill all of this. Remember that price is a magnet, but not a stop. Okay, price is a magnet, but not a stop. So if this is a magnet, we know that price is going to come back up and try to fill this, right? So around this area, what's the closest piece of liquidity that price is attracted towards?
The buy side liquidity.
Buy side liquidity, right? So since buy side liquidity is the one that it's being attracted to, very, very, like almost certainly, price is going to try to take out this piece of liquidity, then maybe come back down. But if we see, you know, prices as it has acted before, very likely it'll something will probably happen around that area. What I would like to see for right now, I wouldn't like to take any big trades on gold right now, unless it's, you know, a continuation into a buy. But what I would like to see is I would like to see price wick this liquidity pool and then drop. Okay, so I would like to see it wick the liquidity pool and then continue on, you know, going a little bit lower, or maybe play within the range. Because right now, what is this stage of the market?
It's bullish.
Reversal.
So if we're just looking at this graph right here,
Consolidation.
right? So
Consolidation.
the local, right? The local kind of weather at the moment is a consolidation, right? But if we look at, you know, higher time frame, it's actually still consolidating. It's still consolidating with a tad bit of bullishness, right? So if we're looking at the very, very local, meaning the very, very temporary points right here, this technically would be a bullish position, right? So right here, we're looking at a bullish expansion. Okay, that's kind of simple right there. Now, here's another question. You could have gotten this wick as an entry. Can anybody tell me why? There's actually a very, very nice, very nice trade that you could have taken here. Would have been a little bit risky, but it's actually a very nice example.
The price came back down to maintain the inefficiency, means efficient price action on a higher time frame. Like we can see that wick which connect.
Right. So actually, it's kind of cool because this is kind of a mix between
The wick to a bullish order block.
exactly perfect. Right. So this wick right here is part of a bullish order block, but it also fills in all of the inefficiencies within these little candles. So this right here came back, and let me actually delete this. Now you guys see it. So it came back, and look at where it touched. It touched right to this wick. So remember that connecting wicks is the name of the game right here. But also remember that in this case, this is also a bullish order block. So a lot of people might have made the mistake of putting their limit right here, and they're like, oh, dang, you know, my limit missed. Well, no, it touched the order block. Just the order block was extended in such a way that that from a visual standpoint, it came all the way up here. So your entry would have been spot perfect right here with your stop loss, below the wick, because if it's coming all the way back down to the order block, just don't take a part of it, right? But right here, you could have taken a risky entry, and I mean, it would have been rewarded. So I just thought that was a cool example, because that wick is part of the order block, and it also fills in parts of the inefficiency. Now, remember, I'm going to leave you guys with one last thought before we go. Okay, one last thought. Remember that all of these theories, all of these concepts that we're teaching you, from inefficiencies to order blocks to liquidity voids to vacuum blocks to all these things that you're going to learn later, reclaimed blocks, all these things. Okay. All of these things are derived as visual aids. Okay. So all of these things, they're used to simplify a more difficult to understand theory. But if we understand the theory and then we look at it in practice, it'll be a lot easier for us to apply these things. So for example, right here, it kind of exemplified this teaching, because this is an order block, right? From a very theoretical standpoint, this is an order block. However, this is also filling in an inefficiency. So how can one thing or one landmark be part of two different theories? Well, because both of those theories have to do with volume or with orders. So if we remember correctly, order blocks are a place where orders are being accumulated by the market, right? Or by the market makers, obviously, by the algorithm, right? So if we take that into consideration, also knowing that all of these little candles aren't exactly very efficient, now that price comes down and fills all of these inefficiencies and matches with the wick that comes out of the order block, what can we assume?
Mitigation and fair value.
Right, exactly. Mitigation and fair value. Perfect. So all of these, this wick caused mitigation, which therefore made all of this completely fair evaluation. So from here, it's fair game, right? So remember that everything has to do with orders, everything has to do with volume, and everything has to do with liquidity. Okay. And volume and liquidity are very closely tied together. So you can for now, until I make a distinct difference, you can kind of put them together a little bit. So just think of them as orders. Okay. So these two theories that we see put together right here are very important. But what I want you guys to get out of this is that you guys have been learning a lot of ways to simplify the very, very complex theories. But what I want you guys to do is I don't want you guys to discard one thing because it could be another. Okay. So I don't want you guys to say like, oh, well, this week is weird because of this. No. Okay. Take it into consideration. Think about it. Where are these orders coming from? Would it be plausible that these orders come back and fill in, like, is this wick serving a purpose? So what I want you guys to ask yourselves when you guys are looking at your new trades is this thing serving a purpose? And in this case, right, it absolutely is. It absolutely is serving a purpose. So does anybody have any questions? Anything else that I can do for you guys? I do have to go in the next couple minutes.
So gold next move and GN, sir, gold and GN.
What do you mean? What?
Means
This is gold,
from
sir.
where it will reverse.
This is
Next
gold.
possible. Yes, sir.
So I was looking at gold, and I think price will very likely continue on higher after a couple of retracements. I think it's going to play within this range, so you guys can take a couple of trades within this range. Just remember what I said. It's consolidation. So now from here, just try to look for expansions, retracements, and try to frame your trades
Until the
within them.
breakout is not there, we can play in this area, right?
Yeah, exactly. Until they tell you to leave the playground, you can keep playing in it, right? So right here, this is our sandbox. Okay, this is our sandbox. So until price leaves, then we can keep, we can stay in the sandbox. So just stay in here, and try to play within the range until it takes out structure. Now remember, I mean a clear break of structure, not a wick into liquidity. Okay, so until it taps liquidity, right? Just play within the range. You guys can, take a trade up to take out this liquidity. That's fine. Maybe it comes back down and it taps this liquidity again. No problem. Maybe it taps into this previous order block, which has a really
Yeah.
long wick, which I don't like. But it was created in New York, so very likely I don't really like it all that much. Remember that order blocks that are the strongest for the most part come out of London session. So well, this is London New York crossover, so I guess that's fine. But yeah, the order blocks that are the strongest come out of London session. So kind of look at time also. That's another thing that's very, very important. Okay.
So second thing, if we take our Fibonacci retracement tool on the same level, the order block which I have identified, can you put a Fib tool over there?
Yeah. Now, do you
For
put your
the
fib? Do
this
you put your
green, this
fib
green
from?
red movement, you can put a Fib tool
Do you put your fib from the wick or from the body?
from the wick only.
From the wick.
How we should be taking it, from the body or from the wick only?
Usually, I go body to wick. My personal
Bo-
preference.
Body to wick. Okay.
Yeah.
If you take from body to wick. Okay, now it has actually crossed the 0.79%.
If we
Okay.
put it from wick to wick,
Mm,
actually, well, the wick is all the way down here, actually.
And it really doesn't matter. That's a preference, depending on how you place your fibs, by the way.
Yeah, it doesn't matter. It's a preference, right?
hmm. In case, I don't know, maybe I'm confused, but
So I
So,
understand your confusion. Your confusion lies from you want to cling on to this level and you want to say, okay, no, this level is good. There was clean movement from from before it.
So last time it was due to DXY. This reversal candle.
This looks like something you saw on the dollar index.
Yes, sir. Yes, sir. You can
Okay.
check. I have checked it.
Okay, well,
All of us, sir.
we can look at it really quickly and see if there's something there. Oh, like this, right? Yeah. Oh, actually, that's very good. That's very good, Rajat. Actually, so I want you to look at this, Mahesh. I want you to look at this, and I want you to tell me if this would buy or if this will continue on lower.
I guess it's on sell.
it will go to sell only
To sell only. Why?
because if you
There was a previous rally into the consequent encroachment of the previous bearish order block above it. So it has to run out the sell stop liquidity that's at the bottom.
Perfect.
Yes, correct. Yes.
price also sold from the equilibrium level.
Right. Price sold from the
Notice.
equilibrium. All right. So Mark, to everybody that's a little bit more advanced, Mark just gave you the perfect answer, right? That's absolutely perfect. That's like exactly what ICT would say. Now, if for the people who are a little bit less advanced, which is completely fine, okay, what Mahesh said is actually very good too. So it went back into equilibrium, right? So what Mark said was it encroached on the previous bearish order block, right? Now what happened here is also it came back up and it captured a lot of internal liquidity, came back into equilibrium, right? And now once this happened, right, price had already broken structure. So this is what you kind of want to look what you want to look at, Mahesh. So what I want you to kind of think about right here is focus on this, okay? Focus on this. You see this? Is this not what you wanted to see in gold?
yeah
This is exactly what you wanted to see in gold, right?
Yeah.
If we go back and we see this, this is what you wanted to see.
yeah
Okay, this is what you wanted to see, but I want you to see the difference. Okay, the biggest difference here is this piece right here does not have liquidity above it. Liquidity has already been mitigated from here. Liquidity is
Okay.
already long gone from here. Okay.
Okay.
So this point, like this movement took out liquidity.
Okay.
Did this movement take out anything? Not really.
Not.
Very likely there's still liquidity back here. Okay.
Yeah.
Now this movement did take out liquidity. You see this, it did take it
Yeah.
out.
Yeah. Yeah.
So back here, there's very likely not much liquidity that we can go off of. But on the other side, there's still a lot of liquidity that we can go off of, right? Now, I want you to take a look at this, okay? And I want you to flip it over at this chart, and I want you to flip it over. So turn your screen around or turn your head around, whatever. Does that look similar? It should.
Mm,
Yes, sir. Inversely proportional.
Yes, sir.
Same.
So
Yes,
can you
sir.
press Alt I? It
Does
will
this look
invert.
similar? Hold on, let Mahesh speak. Does this look
Yeah.
similar?
Yes, sir. Yeah.
It's kind of like it was flipped over, right?
Yeah.
Yeah. So very, very likely, right? So what we can use the dollar index as is kind of a little bit of confluence here. And if you said that the dollar index will very likely sell because it's already pierced through these levels and very likely it's just going to keep on
So the
selling,
gold will be bullish only.
then gold will very likely push through this level, right? And capture liquidity, just as the dollar index needs to capture external liquidity down here.
Yeah.
Does that make sense?
Yeah.
I hope that made sense. Cool, right?
Yeah.
All right, guys. So I'm going to go ahead and leave it off here. Okay. This is something that I want you guys to kind of analyze. All right. I'm going to stop the recording here.